Does your bank or credit union use social media? Awesome! But if you don't comply with social media laws, you can really break the bank. Let's find out why on today's episode. Attorney and founder of the social media law firm, the only law firm in the world that protects businesses from the dangers of social media. And today, we're going to talk social media compliance for banks and credit unions. Now, social media for banks can be kind of tricky. On the one hand, you know the big rewards that comes with using social media. You can engage your community, spread awareness for your bank, promote your products and services. It's awesome. On the other hand, there are serious legal risks that you must be aware of, or else you can get into dangerous trouble. I mean, let's say discrimination laws, banking laws, social media laws, HR laws, IT laws, security, regulation. My goodness, it boggles the mind. It makes you almost wonder, if there's so much risk out there, do I even want to get in the game in the first place? Well, if you ask me, the answer is you have to get in the game. You have to use social media. Folks, it's 2019, almost 2020. If you're not on social media, do you really exist? Of course you do. But from a banking perspective, if your bank or credit union doesn't take advantage of social media, guess who is? That's right, your competitors. They're the ones out there getting in front of your target clients. They're the ones out there building relationships, and they are growing. Just because there is risk doesn't mean that there isn't great reward. And what we're going to talk about on the podcast today is how to experience those really beneficial rewards without putting your bank or your credit union in serious legal risk. But from a high level, before we dive in, let's think about, why are we talking about this now? I mean, you're like, Ethan, banks have been around for ever. Social media has been around for at least a dozen years. I mean, remember MySpace? Do you still have a MySpace account, by the way? Do you really? If so, we need to have a stern talking to. But in any case, you're probably thinking, Ethan, social media's been around, banks been around. Why is this important now? And the reason is that there are new banking laws and regulations that govern social media that you must know about. Because if you don't comply with these laws, you get into some serious hot water, and no one wants that. So today, I'm going to demonstrate to you how to be social but safe, and we're going to cover this in 3 topics. First, what is the law? Meaning, what are these social media laws and regulations that apply to the banking industry? 2, why is compliance so complicated? I mean, we've got in-house lawyers, we have compliance departments, so shouldn't this stuff be easy? Well, you'll see. And third, we're going to talk about what your bank or credit union needs in order to comply with the law when using social media, and that's exactly what we're going to be talking about today. So, first, let's talk about what is the law. What do I need to know if I am a bank or a credit union, if I'm in the marketing department who's responsible for executing social media, if I'm in the compliance department that's in charge of keeping my bank safe, if I'm in HR and I've got employees that are using social media in their downtime, hopefully, while they are not working, what do you need to know? Well, here's the laws that apply to social media. Are you ready? The answer is all of them. Every single law that would otherwise apply to your banking products, services, advertisements, also apply to social media. Now that might sound overwhelming for a second because there's so many laws that apply to the banking industry. Truth in Savings, Truth in Lending, Fair Housing Act, member FDIC, the NCUA guidelines if you are a credit union, anti-discriminatory regulations, the Equal Housing Opportunity Act or Equal Credit Opportunity Act. I kind of mixed the fair housing and equal credit together to create one monster law that doesn't exist. But all the same laws and regulations that would apply to your financial institution. If you were marketing yourself on television or in a newspaper or on the radio, also apply to social media. So the question is, how do we take these old laws and apply them to these new technologies? Because things are a bit tricky, meaning when our founding fathers wrote the Declaration of Independence, they weren't Snapchatting the darn thing, meaning these technologies were never in their mind. And so if you go back to 30, 40, 50 years, when financial laws and regulations became codified to today's environment and took into account things like, the internet, Facebook, Instagram, Twitter, LinkedIn, it wasn't even a thought. So we had to figure out how to apply these existing laws to these new technologies. And along came an incredibly helpful partner that told us how to do it, and it was the government. I mean, come on, man. The US government, they're so nice, they're so helpful. Yeah, they want to take our taxes and whatnot, but they provide us with helpful resources. And one of them is known as the Federal Financial Institution Examination Council. This is a group that is a federal regulatory governmental entity, and they have created social media guidance memorandum that was supposed to be a short and easy to follow resource to let us as financial institutions know how do these old archaic banking laws apply to Facebook, Twitter, Instagram, and others. And because the federal government is so nice and so helpful, they gave us this short, easy to follow resource. But the short, easy to follow guide goes on and on and on and on. It's like 50 pages long. It is probably longer than the Constitution, longer than the Declaration of Independence. I can guarantee you that this is probably longer than the laws themselves. How is this helpful? All right, I'm a lawyer. I don't like reading all this stuff. Get that out of here. All right, I'm instead going to talk to you about this stuff in plain English. Not because the FFIEC, Federal Financial Institution Examination Council, if I say that 10 times, this podcast will be 10 hours long. The FFIEC wants to be helpful. It wants to provide guidance, but it's really not so much in plain English. So we're going to cover some of this stuff in super plain English today, but just know that there's a resource out there. And if you search for FFIEC, Social Media Memorandum, on Google, you're going to find the document. FFIEC, Social Media Memorandum, you're going to find the document. Or if you search for FFIEC, Social Media Guidance, you're going to find it as well. So it's out there, but you can read that boring ass thing, or you can sit here and chill with me for the next 15 minutes and we'll talk about it. So why is it so important that you follow this stuff in the first place? Meaning, yeah, you got to follow the laws. Yeah, you got to follow the guidelines. But what happens if I don't? The answer is the world is going to end and crumble and no more banking. Maybe not that serious, but slightly less serious means you could be sued. You can have regulators come in and audit your bank. Your examiners can come in and issue cease and desist letters. They can stop you from using social media. You can be fined. You could have to pay attorney's fees. You can be sued for defamation or loss of people's data. And the worst part is, even though there are those legal risks and compliance risks, some of the bigger risks are things like operational risks, meaning you have to stop what you're doing, which is marketing your bank, and instead have to deal with social media stuff that is messed up and stops your employees from doing their job, and instead going into damage control. The biggest risk, other than operational, legal, and compliance, is reputational risk. Things can go viral, and when they do, the harm to your bank or credit union's reputation can be 10,000 times worse than just having to pay a money fine. Paying a money fine is big, and it's not cool, and no one wants to pay it, especially if you're a credit union and you are responsible for using your members' funds wisely in how you promote and administer your credit union and serve your members. But the reputational risk can be so harmful. Once a bell is rung, it is impossible for it to become unrung. What do I mean? You don't know the vibrations of all the bad things that can happen, and you don't want that to happen to your bank. So that's why following social media laws and the FFIEC memorandum is important, and that's really critical for you. So now let's talk about why compliance is so complicated. I mean, think about this. I'm a social media lawyer, all right? So I solve problems relating to social media, and I help banks and credit unions comply with social media laws. Why the heck do I exist in the first place? And what I mean by that is there are so many talented in-house compliance departments and even in-house legal. Shouldn't they, who deal with the banking industry day in and day out, be well equipped to handle these issues? And the answer is sometimes. Meaning social media is constantly changing, it's constantly evolving, and therefore compliance becomes so complicated because the legal and compliance issues that had to be faced 15 years ago, 10 years ago, even 5 years ago are not the compliance risks that we have today. And so it requires us to constantly keep our finger on the pulse of what's going on with social media, because the social media and the law will intersect at some point, and that intersection point changes, and there are different features and different areas of law that makes things so difficult. For example, let's just think about Facebook versus Twitter. Facebook has almost like unlimited characters that you can put in a post. Twitter has only 280 characters, and it was 140 at a particular point. So how do you include disclaimers and disclosures when promoting a product on Twitter as opposed to Facebook? It's different. And so that's why compliance could be complicated. Now, let me hammer down 2 specific reasons why I think compliance is complicated. First is that certain laws govern what you can or can't say on social media. Let me give you an example, one that we touched upon just a minute ago. Let's talk about the Truth in Lending Act. Right, everyone who's involved in banking has credit products, credit cards, loans, and we want to offer these to consumers like you or me so that we can buy stuff we can't afford and pay the bank back later, all right? Credit's awesome. Paying my credit card interest bills, not awesome, but it's all a part of life. So different banks have different types of credit and loan products or services. And there's a law called the Truth in Lending Act, or Regulation Z, which is a regulation that implements the Truth in Lending Act. And through these regulations, we want to make sure that consumers can compare apples to apples, meaning the loan products that your financial institution offers and how it compares to your competitors' products or services. So in order to comply with the Truth in Lending Act, we need to include certain disclosures or disclaimers as part of our advertisements to make sure that people know and understand the complete terms that govern your specific credit or loan product. And so, how do you comply with this stuff on social media? You're going to need to do things like if there's an APR or an APY, what we call a trigger term, annual percentage rate or annual percentage yield, it triggers your responsibility to include more disclosures and disclaimers, such as the length of time, the rate, whether the rate is variable, if there is a fee, blah, 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 more legal stuff. And you can't fit all that legal stuff into a 280 character tweet. So what do? You have to follow things like the one click away rule. You have to have a hyperlink that takes consumers directly to the terms and conditions that apply to that specific product, meaning you can't go to your home page and have them fish around and find it. You have to go directly to the page that promotes that credit product that you are putting in your social media post. You might also need to include clear language accompanying the hyperlink, like to learn more about our credit offer, please click here, or terms, or something to let consumers know that they can find the complete terms and conditions on a different post. Now, for some products, you may need to put things like member FDIC, or your NCUA statement, or the Fair Equal Housing Opportunity or Equal Housing Lender logo, depending upon whether this is a housing-related loan. So as you can see, compliance can be complicated because certain laws govern what we can or must or can't and shouldn't say in our posts. And it differs depending upon the different types of social media platforms that we're using and the different mechanisms, meaning if you're running a sponsored ad, it might be different from putting it into an organic post. So that's one of the reasons why compliance is so complicated. The second reason why compliance is complicated is that certain regulations govern what you must do. So, for example, the FFIEC Social Media Guidance Memorandum says that if you're going to play on social media, then you have to follow the rules. Some of those rules include monitoring your social media profiles so that you can respond to consumers' questions, complaints, and inquiries on a timely basis. The FFIEC actually requires you to monitor your profiles on a regular basis and make sure that you review and respond to people appropriately, just as if they called you, emailed you, or walked in and talked to your teller. Other laws like the Community Reinvestment Act require you to do certain stuff like preserve and archive your social media content for a 3-year basis. And if there are any complaints related to community credit needs, you have to put that social media content into your public file. You got it. I can see all you CRA and compliance people out there high-fiving each other. Boom, we knew the answer to that question. But the question becomes, how do you do that? Meaning social media is so fluid, it changes. You might create content that is easily preserved and reviewed because your bank marketing department or outside marketing agency created it. But what about the comments? What about the shares? What about people sending you a message, tagging you in a post? Things happen all the time. We had a specific situation where one of our banking clients posted Happy Martin Luther King Day, which occurred back in January. Someone in May then complained about some of the bank's community credit needs, that people weren't getting the right types of loans in a more urban development within their city. But that comment came in May, meaning 4 or 5 months later. So you have to use some technology tools that allow you to constantly archive and preserve your social media content and then audit that content regularly to make sure you're both following the laws, following your internal guidelines, and also complying with the Community Reinvestment Act by preserving that content for a 3-year period and putting that information in the public file. Man, that is a lot of stuff. And we just talked about 2 laws. And so compliance can be complicated. And it's so important that we understand this. Not because I want to scare you and say don't play the social media game. I just want to demonstrate that this is a real, big, difficult risk that's out there that does have serious penalties. And the last thing that I want is for your bank to sit on the sidelines and let someone else take advantage of social media, or for you to not know about the risks, take advantage of social media, and then get in big trouble and have to hire a social media banking lawyer later on. And come on, those don't exist, do they? Do they? But seriously, it's better to have an ounce of prevention as opposed to a pound of cure, because lawyers charge more than a pound, whether you're talking about a pound from England or a pound of whatever, they're expensive. Let's just prevent things before they happen, right? Because this negative content really can go viral. And I'll give you an example of one of these situations. There is a credit union, and I'm not going to call out who they are on the podcast because everyone makes mistakes. It's just a natural part of life. Well, this financial institution had a reasonable policy that said, if you're going to come up to our teller window, then we want you to remove your hat and sunglasses from a safety issue. We can see who you are, you can see who we are, we can verify if you're the account holder or not. And 2 white males walked up to the counter in their ball cap, did their banking transaction, and then a Muslim woman walked up with her religious garb, and the teller said, I refuse to serve you unless you take off your religious headdress. And this woman turned on her iPhone and started recording and said, hey, look, I'm happy to comply with your guidelines, but you just let those 2 white dudes over there in ball caps do a banking transaction, but now you're going to make me take my headdress off? That doesn't seem fair. Well, that's a situation that can happen. But what happened next was crazy. The teller started screaming at the woman, chased her out of the credit union, into the parking lot, into her car. The woman recorded the whole thing online, put it up on her YouTube channel, and people started coming out of the woodwork saying, I'm going to leave this credit union immediately. And other people said, Please leave a review for XYZ Credit Union and give a link to their Facebook page where people can leave negative reviews, even if they never were a client or a member of their credit union in the first place. That's one example of how these risks can go viral and how you need to say, while it might be complicated, I want to embrace reality and deal with it. Meaning that I want to take advantage of social media, and I know that there are compliance risks, but I also know that by having a plan in place, we can comply with them and we can take advantage of all the wonderful benefits that social media has to offer while avoiding those serious, scary, and sometimes viral legal risks. So, in our last portion of the episode today, let's talk about what you need. Meaning, how can you comply with social media laws and regulations? Meaning, what does the FFIEC require of my bank or credit union when I want to use social media? The answer is a social media risk management program. So, what is that? The FFIEC says all financial institutions, banks and credit unions that use social media must have a social media risk management program. The size of that program and the breadth and scope of that program needs to be equal to the size and scope of the financial institution's social media presence. So if you've got like one branch, 10 employees, and you post once a month on social media, you still have to comply with the laws. But your social media risk management program is going to be different than if you are one of the largest financial institutions in the country with dozens of branches, giant corporate headquarters, multiple people in your marketing and compliance and HR department that deal with social media. Your program needs to be a bit bigger because your risk and your capabilities and your scope of your social media activities, especially if you're posting daily, is a lot bigger. So what do you need to know about your social media risk management program? Meaning, what must it have? First, your program must cover all departments within your bank that relate to social media. So you need to have participation from stakeholders within marketing, compliance, IT, HR, and any other areas that your bank may have. Your bank may have a separate vendor management process. You might have a CRA director. You might have an information security director. So long as people have certain types of roles that relate to social media, they need to participate in some form or another in coming up with your social media risk management program. So regardless of the department that you're in, it's not just marketing, it's not just compliance, it's not just legal, it could be anyone. So what goes into a social media risk management program for banks and credit unions? It really has to have 7 parts. And I'm not going to go into all of these in great detail today because you got things to do, I got places to be. No, I don't. I'm going to be here in this studio talking to this microphone alone in front of this camera. But at least you're here with me, aren't you, watching this right now? So what are those 7 things that you're going to need? First, you have to have clear roles and responsibilities relating to social media. Meaning you want to have a document that kind of says who's responsible for managing your social media profiles, overseeing them, running the training programs, doing your archiving, your monitoring, etc. Meaning you want to establish initial controls by having a social media risk management program or a document in place that sets forth who's doing what, how they're going to do it, what documents you might have in the bank that kind of make up your social media risk management program, and to be able to demonstrate that senior management has approved of your use of social media and how it's going to further the bank's overall objectives. So the first thing is that clear roles and responsibilities. Second thing that your financial institution is going to need on social media are policies and procedures. Now, what policies and procedures you need is dependent upon your bank's specific social media strategy. At minimum, if A, you have employees, and B, you are using social media to promote the bank, at minimum, you're going to need 2 different policies. One would be your employees' social media use policy. This is typically an HR document that governs what employees can and cannot say on social media so that they can't create risk on behalf of the bank. For example, that employees shouldn't be sharing trade secrets or other confidential business information like products or pricing information so that they don't let the secret sauce go out and competitors can get into their hands. On the other hand, you're going to want to have a social media marketing risk management policy or at least sets of procedures or checklists of how the employees at your bank, likely in your marketing department, can use social media in a way to comply with the laws when they market products, services, and engaging with the community. So it could be checklists for things like how do you respond to customer complaints and inquiries. It could be if you're promoting a mortgage, what are the checklists that you need to have in order to comply with the Fair Housing Act or the Equal Credit Opportunity Act. So at minimum, you're probably going to need those two. What other policies and procedures might your credit union or bank need? You may need social media promotions guidelines, meaning social media contest and sweepstakes or giveaway rules, terms, and conditions if you run them. You may need targeted marketing guidelines, meaning if you're taking advantage of Facebook's advertising features to target specific people within your community for certain types of ads, you need guidelines about how you're going to comply with the Equal Credit Opportunity Act or Fair Housing Act. You also may need certain HR procedures for the use of social media in the hiring process, meaning how do you screen people on social media so you don't bring on risk without doing a reasonable search, but also not expose your bank to anti-discrimination laws. So those are some policies and procedures that your bank might need. The third part of your social media risk management program is going to be training programs. The FFIEC says that if employees at your bank are going to be using social media, they need the right types of training. This, at minimum, should consist of an employee social media training program that educates employees about your employee social media use policy in your handbook, and also an annual social media marketing risk management training. Something that trains your marketing department and compliance and other people who are involved of the do's and don'ts of using social media to promote your financial institution. You may need other training programs depending upon your bank, such as, for example, if you have MLOs or mortgage loan officers who want to use their personal social media profiles to conduct bank business. Can you do it? Sure, but you better train them on what they should or shouldn't do, or else they can get you in trouble. So you need to have training programs. Fourth, you need to have third-party risk management guidelines, meaning a responsible vendor management process for retaining technology vendors or people like advertising, PR, or marketing companies that relate to social media. We know that as a bank or credit union, we are responsible for the actions of our vendors and what they do on our behalf. So we need to make sure that they know how the social media laws and regulations apply to the banking industry. Fifth thing that we're going to need, oversight and monitoring. We want to make sure that we have a dedicated employee, team, or tools that help us to monitor our social media profiles and see what people are saying about us and respond to people timely. This might require someone to escalate something to a different department, or it may mean having pre-approved responses of how to field people's positive, negative, or neutral feedback on your social media profiles. You also need to archive your bank's social media content, meaning preserve your content on an ongoing basis using a technology tool so that you can comply with FFIEC social media guidelines and also the Community Reinvestment Act and others. So that's the fifth area you're going to need. The sixth thing that you need is going to be regular and routine social media audits. Now, usually the auditing department says, ay Dios mío, we gotta audit this stuff all the time. How often? Because you might need to do it quarterly or annually, and that kind of gives people a heart attack. What I'm here to tell you is that while your bank conducts annual audits, both internal and external on certain areas, you likely have to informally audit your bank's social media content and activities more frequently, meaning once a month or once a quarter, depending upon the breadth and scope and how much you post online. The reason is that if you are posting, let's say, once or twice a week, and you don't check to see if things are being done correctly, then you can violate the law 10, 20, 30 times over the course of a quarter, and that can really exponentially expose you to risk. And so you want to make sure that your employees and people who are working on your behalf are creating content correctly, responding and monitoring to people correctly, putting things in the public file correctly. So the FFIEC wants you to conduct those routine social media audits. Finally, the last thing you need is senior management reporting. If your senior management is running your social media, awesome, they can report to themselves, but I assume that they're not, and that there are wonderful employees who are in the marketing department, maybe a millennial who grew up on social media, who is going to be doing the monitoring and content creation on your behalf. That's awesome. But senior management needs to know what's going on, how effectively the marketing campaign is, and from a risk standpoint as well, meaning is the risk management program you have in place working, and what tweaks need to be made. So those are the 7 different parts of your social media risk management program. Clear roles and responsibilities, policies and procedures, training programs, third-party risk management, oversight and monitoring of your social media profiles, regular audits, and senior management reporting. Man, it's a mouthful, and I memorized them all. Ethan, pat yourself on the back. Oh my gosh, I need some yoga. Okay, so that's what everyone needs. So the question is, what does your bank or credit union need for social media? Meaning, what are your next steps? Where do you go from here? You listen to this podcast, you watch the podcast, we laughed, we cried, we learned, it was awesome. What do you need from here? You need one of 2 things. If you are a financial institution that is new to social media, meaning you haven't started using it yet, great. You have this whole wonderful opportunity ahead of you that you're about to embark upon. But before you do so, you should create your social media risk management program first before you start using social media. So some people say shoot first, ask questions later. Nope, not a great idea. You instead want to have the right foundation in place that matches your bank or credit union social media strategy and put it in place. I typically find it takes about a 3-month period of time from strategy, an idea, and inception to being prepared to launch on social media to develop your program, but it can be done. You can put together all 7 of those different parts of the FFIEC Social Media Risk Management Program in place within that period of time and tailor it to your bank or credit union specific needs. So if that's where you are, that's what you need. But you might be saying, Ethan, that's great, but my credit union has been on social media for like 2 years and we're kind of just learning about this now, so it's a little hot in here. What do we do? What you do is you start with a social media risk assessment. What is that? Think of it like going to the doctor for a checkup. You go in there and say, hey doc, I'm still alive this year. Awesome, what's wrong with me? The doc runs various tests, check your height, check your blood, take your blood pressure, hit you with that thing on your knee, that little hammer, and your knee goes whomp all of a sudden and it hurts like heck. Why do you doctors do that? This is 2019. Stop hitting me with a darn hammer. Have we not evolved into something better than wonking me with a hammer like Mario from Donkey Kong? I digress. A social media risk assessment is a really great first step if your financial institution has been using social media, because you can find out the following. You can find out A, what are your current areas of risk? B, what do you already have in place that's going to adequately protect you? C, what's the high, mid, and low priorities for your level of social media risk based upon your bank's activities? And then be able to put in a plan of action as to what to do about it, meaning what to address now and what to address later to make sure that your risk level goes from high down to low. And because every bank or credit union social media activities are different, a social media risk assessment is awesome because it will be tailored specifically to your bank, your social media strategies, your specific risks, and give you a wonderful plan for moving forward so you can be social but safe. So that's what you need. You need an FFIEC compliant social media risk management program. And whether it's building it from the ground up or doing a social media risk assessment, that's the way to go. So how do you conduct that risk assessment? You do it as follows. You call the social media law firm. Awesome, great option. But what you really do and how the process looks is as follows. You A, start by getting all your stakeholders together. B, figuring out what your social media strategy and activities are. C, you collect all your existing policies and procedures to see what you currently have in place. D, you audit, review, and analyze your existing documents, policies, and procedures to see what you have, what's good, what do you not have. And there you prepare an assessment report. And that report's going to say, of these 7 categories, here's the law, here's what we have in place, here's whether it's adequate protection, and here are the recommendations based upon what your analysis says. And from there, you put together that game plan of where to go from here. Our law firm, the social media law firm, for example, produces a comprehensive written report and then a one-page color-coded summary of high risk, moderate risk, and low risk activities and specific action steps for moving forward. Your internal audit department or assessment department can do it as well. Whoever does it, make sure you do it, because the last thing that you want to do is ignore the elephant in the room and then get served with a lawsuit later, or have one of those examiners banging down your door telling you got to shut down some of your operations because you aren't following the social media laws that apply to the banking industry. So that is social media compliance for banks and credit unions in a nutshell. I've talked about this on a general level, but perhaps you have questions, and you know what? I want to hear them and I want to field them for you. So if you have questions about social media risk for banks and credit unions and how it applies to your particular financial institution, awesome. I want to hear from you, and I want to answer your questions right here on this podcast, even if it's going to be anonymous. So how can you do that? First, you can find us on social media. Search for the Social Media Law Firm. You can find us on Facebook, Twitter, LinkedIn, Instagram, not on Snapchat, don't know how to use it, but by searching for the Social Media Law Firm, you can see my ugly mug on there and submit your questions to us, and we'd be happy to field them for you. So please follow us on social media where you can get more tips, tools, resources, and advice on social media compliance for banks and for credit unions. Also, I would love for you to subscribe to this podcast, because why submit a question and then not be around to hear the answer? I mean, come on, it's kind of like having a to be continued at the end of a season of Game of Thrones and then not tune in for the next one. Are you crazy? Subscribe to this podcast on iTunes, Spotify, wherever the heck you listen to us. Like us on YouTube, leave a comment and review if you enjoyed it today. That was our program. That was social media compliance for banks and credit unions. I hope you learned a lot. I hope you have fun. And I hope that one day, maybe even you and I can become friends on Facebook. Thanks, and see you next time.